All right, guys. Most anticipated earnings for next week, as well as some potential options plays. As we can see, some really good companies are reporting earnings for next week. I'm looking at five in particular, and these are going to be a bit risky, I would say, just because of how uncertain the market is right now. So, first up on the list, we got, of course, GameStop reporting earnings Wednesday after the market closes, and GameStop, like all other risky stocks, have seen quite a bit of a pullback. Um, and because of the whole surge with the Christmas shopping, I think GameStop's going to do pretty well for earnings, and I think that it could see a really nice rebound from this dip. So for GameStop, I would just buy and hold shares. You could do calls, like something like a $200 call option. It's only going to cost you a few $100s, I think. Yeah, so this would be a lotto ticket, in my opinion, a $200 call option for next week. And you're going to be paying around $500. So if you want to be a bit risky, go ahead. So GameStop, I would just buy and hold shares for this one. Next up, we got Chewie reporting earnings Thursday after the market closes. And Chewie has also seen quite a bit of a pullback. It's at pretty low levels. It's down on the year. And overall, with more and more people buying, owning pets, Chewy is definitely a really solid company. A lot of people use the products, and I think that they're gonna continue to do well over the year. So let's head over to Thinkorswim and see what the implied move is. It's gonna be plus or minus $9. So that's a pretty big move. And if we take a look at the options chain, um, for December 10th. Yeah, the premiums are very, very high on this stock. Actually, it's amazing to sell puts on. You can go as far as a $40 put and collect almost a 2% return in 1 week. So, yeah, this is a solid options play, in my opinion. Very, very high chance of profit. And if Chewy ends up tanking $22 or more, you have to buy 100 shares at $40 each, which is a very good opportunity to get some shares at a cheap price. Of course, if you're more bullish, you could do like a higher strike, like a $50 strike. But overall, if you want to be really safe and get a 2% return, this $40 cash here put is going to look really good. So that's going to be a play I'm looking for next week pretty heavily, as the premiums are very, very high on this stock. So next up, we got ChargePoint reporting earnings Tuesday after the market closes. And I really like this stock. I currently have a $21 cash geared put for next week. I want to get more into the EV sector, and I can do that through EV charging stations. That's one way to do it. So I really like ChargePoint as well as Blink charging. So we're gonna be taking a look at the options. They're pricing in a $1.80 move. So we can sell some more cash gear puts. You could do like a $19 one, and that's gonna give you 2% return in a week. Even 18 strike looks pretty good for around a 1% return. But yeah, this premiums are pretty high, and I don't mind owning some more shares of ChargePoint if I do get assigned. So next up, we got Dave & Buster's reporting earnings Tuesday after the market closes. And Dave & Buster's, I own this stock in my long-term portfolio, and it's been doing good as a really solid recovery play. It's been doing good before the pandemic, and it's pretty much recovered ever since. But overall, Dave & Buster's, solid company, and as things start to get normalized, people are wanting to do a lot more entertainment stuff. And Dave & Buster's, it really has it all in one place. So let's take a look at the implied move here. Play implied move is plus or minus $3.28. So if we want to sell some cash geared puts here, we could do something just below that. And as you can see, the premiums are very, very high, even though the implied move is pretty low. So we could do something like a $25 cash geared put here, and that's going to be collecting 2% return in a week as well. So as you can see, premiums are very high just because of how uncertain the market is. And adding in the earnings releases this week, it's going to increase the premiums even more. So now is a great time to sell some cash geared puts and collect some really nice premium. So last stock on our list is going to be GitLab. And this is a very similar to GitHub, but it is not open source. GitLab is actually at all-time lows right now. It recently went public October 14th, and it did pretty well in November, but because of the uncertainty in the market, it sold off. So right now, pretty low levels, and it did rebound around the 82 strike, $82 price point. So that's pretty good as well, seeing that people ended up buying the dip on this stock. So if we take a look at this stock, it has an $11.30 implied move from earnings. So let's take a look at the premiums here. What are we dealing with? So we can do something like a 65 or 75 or $70 cash gear put here, and that'd be pretty safe. 85% chance of profit, 89% chance of profit for the 65 strike. And it's pretty low levels. So implied move is around $11, and we're selling it around over $20 under the current stock price. So it's pretty safe in my opinion. And if you do get assigned shares, you're buying it at a low strike. That's about it for this week. Just be careful in the market because everything's very uncertain, especially with the pandemic, and especially with earnings. Implied volatility is going to be amplified even more especially for these stocks. But it could be a very good opportunity to sell some cash share puts because the premiums are going to be very high. So take advantage of that. Thanks for watching.